Have you ever wondered how figures such as Robert Kiyosaki from Rich Dad Poor Dad, Grant Cardone, Donald Trump, and other major players acquire real estate faster than most of us? The key lies in gathering enough cash flow and using it as leverage to gather assets. In this video, I want to talk to you about how you can do that. Welcome to my channel, where we're all about maximizing your financial strategy. My name is Romeo Clark. I'm a CPA and fractional CFO for small business owners. I'm here to help you grow your business, achieve greater profitability, and significantly reduce your taxes. I mean significantly. If you're here, don't forget to hit the like and subscribe button so you don't miss out on these awesome content. So let's go back to the topic. So what's the secret behind these guys achieving such massive cash flow? Well, the secret is tax planning. They're able to take advantage of proactive planning to save them a significant amount of cash during the year so they can use that as leverage to get real estate. So let's jump into what is the definition of tax planning. Tax planning is the proactive process of analyzing one's financial situation and identifying legal strategies in the tax code to reduce your tax liability. Now, we're not talking about just 1 year, we're talking years down the line, identifying the strategies that can really help you beyond the current year. As a Supreme Court justice once said, it is your legal responsibility to find ways to reduce your tax bill. So the question is, why aren't most entrepreneurs and business owners engaging in proactive tax planning? Despite the widespread discussion, many are still apprehensive about the planning. I always say this: if your current CPA or advisor is charging you to prepare your taxes and they're not working with you to do proactive tax planning, if you take the amount that you pay to the IRS and you add the amount that they charge you, they're basically splitting between them and the IRS. In other words, they're working for the IRS. Now, the key here is a lot of people stay away or try to neglect doing tax planning because they're really scared. They're scared that the IRS is going to come knocking down their door. But how we approach tax planning, proactive tax planning, is we meet up with our clients, we eliminate all fear. We tell them, listen, we're going to make sure we're documenting all the position that we're taking to save you on taxes, because we do not fear the IRS, okay? We are responsible tax preparers, tax planner. So we don't fear, but we have the respect, okay? So we have to make sure that we have that level of documentation and know what we're doing. All right, so let's jump into the different types of strategies that we help our clients with to reduce their tax bill. Number one, entity optimization. So with entity optimization, we're making sure that you're sitting in the right entity that's optimized to give you the best tax scenario, whether that be an LLC, S corporation, C corporation, or partnership, and even exploring trust when we need to. The other one is proactive tax strategies. Now, we're reviewing your entire financial landscape and we're putting pieces of puzzles together to see where can we find in a code the best scenario for you where we can save you on your taxes. And number three is deductions and credits. Now, leaving no stones unturned and uncover potential tax deductions for you and credits, we're really looking meticulously at your bookkeeping, making sure that you're taking advantage of all the deductions you would qualify for as a business, and making sure that you're taking advantage. Any credits that you would be able to qualify for, we're scrumming through all of the data to make sure that those are taken advantage of. So now let's go over what tax planning isn't, because there's a lot of misconception out there about what is tax planning. So let's talk about what it isn't. Tax planning isn't waiting until the end of the year to put a bunch of stress on your tax preparer or your CPA about potential tax saving strategies. And unfortunately, due to the lack of planning, this is what happens with a lot of business owners. So we want to eliminate the need for that and do more proactive planning. Even at the beginning of the year, each quarter has a different purpose. So at the beginning of the year, we're saying, what are you planning to do throughout the year, and how we can shape up your strategy so that we don't wait until the end of the quarter. If you do this, it just, again, creates a lot of stress that's unneeded. Okay, the other item here is it's not necessary to spend on unneeded costs in your business to generate a tax deduction. So I always say, why would you spend a dollar that's really on something you don't need to save 30 cents? What this does is really just messes with your cash flow. So we don't want to spend something you don't have to create a deduction. I once had a client that decided to buy this expensive vehicle at the end of the year that they didn't even use that much for business. It was really majority used for personal. And guess what? They had a huge cash outflow that could potentially hurt their business position down the line. So it's very important that we pay attention and do planning when looking at how can we save. Most importantly, tax planning is not illegal. Okay, it's your right to minimize your taxes. Look at your own situation and find ways, proactive ways to minimize your tax situation. Work with your CPA, work with a legal team, and making sure that you're taking advantage of the tax code here, okay? So listen, so if you're a business owner or a high earner, I really want you to remember that you have the ability to reduce your tax burden. Don't hesitate to implement tax strategies. And if your CPA tells you something like, hey, that's too ambitious, this, you could get audited by these things, and they don't look into it, do the research, then I would really consider that relationship and remember, who is that CPA really working for? So it's important that you're working with somebody that does not fear the IRS, but is respectful and will go to bat for you and tell you what you need to do to take advantage of the tax code. Well, that wraps up today's topic, folks. Thank you so much for sticking around with me. Remember to hit the subscribe button to stay updated on my latest videos. If you found this video helpful for you, for someone, send it to that person. Hit the like button so that I can know and keep sharing videos like this that will help you with your financial strategies. Thank you.